Hi, and welcome to the video presentation of Iberiabank for Birken Road Reports. My name is Saharsh Sinha, and along with my colleagues Mohammad Imran, Mahesh Rajan, and Bhargava Shivari, it is my pleasure to present the report to you. Our team has assigned a 12-month target price of $72 and an investment rating of market perform to Iberiabank. The agenda for today's report includes a quick description of the company, followed by the overview of the banking industry and comparison of Iberiabank to other institutions in its peer group. Next, we will talk about the various valuation methods that we use to come up with our financial performance and projections. Finally, we will discuss the various factors that we took into consideration for our investment thesis, followed by shareholder analysis and the risk the company faces. Iberiabank Corporation is the financial holding company for Iberiabank and is headquartered in Lafayette, Louisiana. As of March 18th, the stock price closed at $63.09. The company's market cap is $2.63 billion and there are 41.81 million shares outstanding. Now let us move on and examine the industry in which Iberiabank operates. Iberiabank is considered a regional bank, which is a bank that typically operates across multiple branches in a particular region and has assets between $10 billion and $250 billion. Over the past several years, the banking industry has changed. Banks have started cutting costs, consolidating, and have also started offering specialty services such as wealth management, etc. Competition is high amongst banks, and several non-banking substitutes are threatening the banking environment further. Regulatory bodies have a significant impact on the financial services industry and banks in particular. Under the Volcker Rule, banks are prevented from any trading activities that will result in direct profits from the market and can only trade for consumers or for hedging purposes. Banks have offset this revenue reduction by raising fees on checking accounts as well as increasing minimum balance requirements. The Federal Reserve regulation lowered the service charges banks can levy on deposit accounts. Finally, Basel III is a set of reform measures to monitor risks in the banking sector and requires banks to maintain a total capital ratio of 8%. Iberiabank's total capital ratio is 12.31%, which is higher than the required standard. Most of Iberiabank's financial metrics are within an acceptable range of peer averages. With a price to tangible book value of 1.62 versus peer average of 2.09, the company trades at a lower multiple for the same amount of book value compared to its peers. Iberiabank's non-performing assets to total assets ratio is 0.41% as compared to the peer average of 0.73%. The comparison ratios indicate that the market values Iberiabank similarly to its peers. However, this valuation does not take into consideration likely future acquisitions. To evaluate the company, we used dividend discount method, price to earnings ratio, and price to tangible book value ratio and weighted them equally to come up with our 12-month target price. We weighed them equally as we felt neither one of these criteria can overshadow another. Price to earnings ratio relates the market's expectation of future company performance to the company's actual recent performance. Price to tangible book value represents how much investors are paying for each dollar of physical assets or what investors get if the company is liquidated immediately. Dividend discount method is used over discounted cash flow method as it is difficult to estimate cash flows for a financial institution. Dividends, on the other hand, paid by these institutions are sustainable and easy to forecast. The net interest income for Iberiabank increased by approximately $70 million in 2014 as compared to 2013, and according to our estimate, it will increase by $210 million to reach a figure of $670 million in 2015. The earnings per share has increased as well to $3.3 in 2014 and is estimated to increase to $3.5 in 2015. the efficiency ratio has shown significant improvement and was down to 74.90% in 2014 as compared to 84.60% in 2013. Iberiabank's strategy is to focus on organic loan growth while continuing to look for lucrative acquisition targets. Traditionally, Iberiabank's loan growth has been about 4 times higher than industry average, which shows that the company has viewed organic growth as an important means to overall growth. Tangible efficiency ratio is the metric used to analyze the operating efficiency of banks. From a not so efficient 82.1%, the tangible efficiency ratio is now down to 65.9%. The company is focused on achieving a 60% efficiency ratio by the end of this year and hopes to boost investor confidence through constant improvement in this regard. As energy-related loans account for a marginal 7.7% of the total loan portfolio of Iberiabank, the company is fairly well shielded from slumps in oil prices. Further, within the energy loan mix, only 30% of the loans involve the high-risk energy service companies. Therefore, we do not see investors worrying over tumbling oil prices. Banks rely on the interest spread between loans and deposits, and thus low interest rates affect profitability. However, the Federal Open Market Committee expects the rates to reach 1.27% by the end of 2015 and 2.68% in 2016. This promises to boost profitability of banks in general. Iberiabank's asset quality and credit quality are excellent, and the company continues to be well positioned for organic growth. With increasing risks in loan portfolio, Iberiabank has implemented conservative lending practices by revising its loan policies. As a result of the company's performance, they could become a target for a bigger bank for an acquisition. Approximately 83.74% of Iberiabank's shares are held by institutional holdings. In recent years, the number of outstanding shares at Iberiabank has not increased significantly. This is largely a positive indicator of the company's performance. Going forward, there are certain risks that the company faces. The proximity of the company's major markets to the US Gulf Coast region, an area that is vulnerable to hurricanes and storms, raises environmental risks. There is a threat that these storms and hurricanes could damage the company's properties and could subsequently lead to shutting down operations in some regions. The credit risk that Iberiabank faces is similar to the prevailing credit risk in the market in which it operates. In the loan portfolio, business and commercial real estate loans are the most volatile. As a result, any significant default on these loans can adversely affect the company. For instance, if low demand in the housing market continues, the net earnings of Iberiabank will be negatively affected, as real estate companies will not be able to pay interest and principal on time. The severity of regulations has increased since the financial crisis of 2008, increasing consumer protection while at the same time increasing operational and financial burdens on banks. Major threats being the Volcker Rule, Basel III, and the Durbin Amendment, which we have mentioned before. The financial risks faced by banks can be categorized into liquidity risks and interest rate risks. Iberiabank uses a larger chunk of its deposits in giving out loans as compared to peers, which means the company cannot afford to increase loans without increasing its risks of having lesser funds available for its requirement. Interest rates can be viewed as a rental or leasing charge placed on customers by banks for using the bank's assets in the form of loans. Interest rate fluctuations are most likely to affect the company's net interest income, which contributes a majority of the company's earnings, and thus the company runs a risk of reduced profits. The Federal Reserve's vote to slash the monthly quantitative easing program from $85 billion to $75 billion threatened to push interest rates higher. Despite this, Iberiabank's loan grew by a healthy 13%. In conclusion, as of March 18, 2015, Iberiabank's stock price was $63.09. Our 12-month target price is $72, and we have given Iberiabank a rating of market perform. We believe that Iberiabank will continue to grow organically and by acquiring smaller banks or be acquired by a bigger bank. We want to thank you for watching our presentation. The detailed report can be found on birkenroad.org/reports.